Today we are going to look into the forfeiture and reissue of shares. So this is the 13th sum from Standard 12 textbook. The sum goes as Simon Limited. So Simon Limited is the person who's owning the business, and he has issued 50,000 shares at rupees 10 each of face value. So the face value of the share is rupees 10 each. So let's see the breakup. So application, allotment, first call and final call are the breakup of the particular 10 rupees. So the application money for the share is rupees 1 and the allotment is rupees 5 and the first call is rupees 2 and the final call is also rupees 2. So when I add up, I get a total of 10 rupees. So my face value and my breakup of shares are the same. That is, there is no premium or no discount involved in this sum. So when we read through the sum, it has said that all the shares were fully subscribed and all the amount were duly received except for 2,000 shares which were forfeited. So the forfeited shares were 2,000. Were forfeited for the non-payment of the final call. So when you are doing the final call, the due entry will not change, whereas the entry where we receive the money for the final call will change. So this 2,000 shares were reissued. So the entire amount of 2,000 shares are being reissued to Elango at rupees. So reissued 2,000 shares at rupees 8. Okay, so this is a sum. Simon Limited, he issued 50,000 shares at rupees 10 each. So the face value is 10. When I add up the breakup of that particular one share value, it comes to 10. So my face value is equal to my breakup. Therefore, it is not a premium or not a discount sum. Next, when we read through, they have given that they have forfeited 2,000 shares for the non-payment of the final call money. So these 2,000 shares, the same amount of 2,000 shares have been reissued to someone else at rupees 8. So they've asked us to journalize the above transaction. So let's go into the journal entries. This is a very simple and easy sum. Since there's no rejection or there's no prorata, it is very easy. The first entry is going to be the application money received. So bank account data to share application. Totally 50,000 shares were used. So I write 50,000 for both. And the application money is 1 rupee. So it's going to be 1. So 50,000 on both sides of the debit and the credit. Next, the same amount is going to be transferred into the share capital. So the entry is share application account data to share capital. The same 50,000 is going to be transferred into the share capital account for the application money received. Next is the allotment. So the first in the allotment entry is the due entry, that is share allotment account data to share capital. So here too 50,000 shares are being used and the allotment money is rupees 5. So 50,000 to 5 is going to be 2,50,000. So that is going to be entered on both sides of the debit and credit. The same 2,50,000 is going to be transferred into the receipt of allotment entry, that is bank account data to share allotment, that is 2,50,000. Again, there won't be any changes in this. Next is going to be the first call. So the first call entry is going to be the due entry first, that is share first call account data to share capital, and the next entry is going to be the receipt of the first call, that is bank account data to share first call. So the amount of first call is going to be 2 rupees. So we multiply the entire 50,000 into 2, which will give us 1 lakh. So enter that 1 lakh in both the debit and the credit column. Next, for the bank to share first call, that is the share first call money received entry, also the same 1 lakh is going to be copied down there. Because there's no changes in the first call, only in the final call we must be very careful, because there is a 2,000 forfeiture of shares in that particular final call. So next, let's go into the final call. So the share final call entries are going to be the due entry and the receipt of share final call. So the due entry is share final call account data to share capital. Here the entire 50,000 of shares are being expected to be paid by the shareholders. So 50,000 into 2. So the due amount is going to be 1 lakh. But when we go into the receipt of final call, out of this 50,000 shares, 2,000 shares were forfeited, that is cancelled, for the non-payment of the final call. So that 2,000 has to be subtracted from the 50,000. So the company may be receiving only 48,000 shares. The value for only 48,000 shares will be received. That is, the final call value is 2. So 48,000 into 2 is going to be 96,000. So this 96,000 has to be recorded in this particular entry. Next is the forfeiture entry. So the forfeiture entry is share capital account debtor to share final call, 2 shares forfeited. These two credits can be interchanged and written, that is mixed up and written. Don't worry about that. You can either put share forfeiture on top and then put share final call also. Right. So the number of shares forfeited are 2,000. So let me write 2,000 for all the three. Now, share capital, the face value is the called up value. So, that is rupees 10. So, 2,000 into 10 is 20,000. So, that's going to be your only debit. Next, both are the credits. So, final call, I know, that is rupees 2 rupees. So, 2,000 into 2 is going to be 4,000. So, next is, you can either subtract this way. So 20,000 minus 4,000 is going to be 16,000 as the shares forfeited, or 10 minus 2 is going to be 8. 8 into 2,000, 16,000. However you do, it is correct. Or you can use the other method to recheck your answer whether it is correct. So next move on into the reissue entry. So what makes this sum very easy is the same amount of shares which is going to be reissued. So let me put 2,000 for all the three items over here. So the reissue entry is bank account data, shares forfeited account data to share capital. So all the three is going to be multiplied with 2,000 shares. So it has been reissued for 8 rupees. So the bank account will refer to that value. So 2,000 to 8 is going to be 16,000. Now shares forfeited, leave it out. Share capital, I know the called up value is 10 rupees. So 2,000 into 10, the credit goes to 20,000. So the credit side balance is 20. So I must make the debit to be equal to the credit. So 20 minus 16 is going to be 4,000. This is one way of doing it. The other way is per value. So 10 minus 8 is 2. 2,000 into 2 is 4,000. So my answer is correct. So next let's go into the capital reserve. That is, we have to compare and transfer the profit into the capital reserve account. So let me give you the journal entry for the capital reserve. So the capital reserve entry is shares forfeited account data to capital reserve. Since the same amount of shares have been forfeited and reissued, this sum is very easy for capital reserve calculation. So here in a forfeiture entry, can you see the 16,000 shares forfeited? 16,000. Next, move on to the reissue entry and see exactly how much is shares forfeited in the reissue entry. 4,000. So you're just going to subtract the 16,000 from 4,000. So 16,000 minus 4,000, 12,000 rupees. That 12,000 has to be entered into the capital reserve journal entry. So that is nothing but 16,000 minus 4,000. 16,000 from the shares forfeited, from the forfeiture entry of the shares forfeited, and 4,000 from the forfeiture entry from the reissue. So when you subtract it, you will get 12,000. That is going to be your profit on reissue transferred into the capital reserve account.